This is weekly commentary 58. Now, from the last week, so from this candle, I want to see them move into this small fair value gap here. We didn't even take the previous week's low. So what have I taught you guys? What type of candle is this where the previous high or the previous low doesn't get attacked and you remain inside the candle? We call this an inside candle. Now, what does the inside candle mean? What it means is this: on the time frames underneath the one with the inside candle, so we're on the weekly, so the daily and the 4 hour, is an underlying accumulation. Why? Because there has been no manipulation to take either the previous week's low or the previous week's high. So if we go onto the daily chart, you'll see it, right? Essentially, this was the week that we was in, right? Monday, Tuesday, Wednesday, Thursday, Friday. You see how we didn't take out this low, right? And we didn't take out, we didn't go out to take out any highs around here as well. Now, one thing I want to take your attention to is this: it's a new month. Now, it's a new month, so what does that mean for the monthly time frame? It means that we have a new monthly candle. Now, you see it's a bit sticky here. Where does the next candle go? Because we have a 3 bar swing here, right? You see how we've created a 3 bar swing here. Now, this is pretty much a premature rejection block. There's a swing low, and this is the wick that took out this previous candle's low, and we displaced higher. So now you see how we've come into that rejection block here on the monthly. Now, it's very interesting to see where we move away from here. But you see how it's quite sideways, and this candle, it didn't give a strong confirmation of we're going to move away higher from this swing point, or are we going to come down lower and meet the discount, lower into here, maybe foreclose this fair value gap from this candle's low to this candle's high. Now, as well as that, there's going to be a new opening of the 3 month candle. Now, the 3 month candle, we came into the 50% of this fair value gap or liquidity void from this candle's, open to this candle's high. Now, where does this next candle, where is it likely to go? When the new monthly candle starts, now I want you guys to understand this. Every single candle is always open, high, low, close, and the time of it. Now, in saying it, the same principle applies to every single candle. Every open, low, high, close candle, so every single bullish candle, open, the ones that open make the low first and then the high, then the close. That's usually the anatomy of a bullish candle. Usually that low, that Judas swing is early on in the candle's lifetime, right? So if we're talking about a daily, that Judas swing happens, early on in the day, New York time from midnight to at least, 5 a.m. Within those 5 hours from midnight to 5 a.m. Or I'd even, crunch it down to 4 a.m., 3 a.m., right? That Judas swing is usually done on a, lower on a bullish day. Now, what about a monthly candle? Where do you expect the Judas to be for the monthly candle? Early on, right? Maybe if you consider the weeks of the month, we have 4 weeks. Usually it will be like 1 week, you know, Judas swing, or not a whole 2 weeks, but maybe like 10 days or something like that. Now, this is where we blend in the economic calendar, right? Monday, we have the PMI. Tuesday, the JOLTS. Wednesday, we have ADP, NFP, and we have the ISM services PMI. Unemployment claims. They've changed this to a red folder, which is actually quite good. I think we said before earlier on in the mentorship that this unemployment claims should actually be a red folder instead of an orange one. It's good to see they made that change. And then we have, the NFP. Now, where we are on the monthly and where we are on the weekly, it's very hard to understand where the daily candles will go, because if we don't understand where the monthly and the weekly is likely to go, then how do we understand how the daily time frame is going to build that up? Now, from the daily, where we left off was this. We're inside this rejection block, right? Now, we came down quite deep into it, past the 50%, which I don't really like, but we swept the previous day's low for Thursday's candle, and we expanded higher. Now, usually from here, when we take out the previous candle's low, we displace, because if you check the 1 hour, right, we'd aim for this initial consolidation right here, right? And I believe on Wednesday, when we just moved down lower, or no, on Thursday when we just moved down lower, I said, there's a market maker buy model framework in the Telegram group chat. I believe it was this and then this. This is what I was looking for Thursday with the news event, but we kind of just slapped down lower. This is what I was looking for, the run here and that displacement away, come back down into the OTE of this range and then continue to this initial consolidation. In saying that, when you're unsure, this is what I want you guys to work off of. Focus this, the next daily candle. Where is the closest objective from the open of the next candle? Frame a trade to that direction. I'll give you an example. This previous day's high. Now, what can we notice about Wednesday and Thursday's candle? Let's look at the high. I want you to pay attention to this bit, the H. 786, 781. So this high is intact and it's, 0.005 points, right? So we can deem that as equal highs. So if we just wanna, if we mark out, if I use the magnet tool, if we mark those out, right, and now this is your weekly fair value gap for this candle. Now, marking out these highs, right, I'd favor a run into this buy side liquidity pool, given all the news, in this week, and this run is likely to happen early on in the week. Monday or Tuesday, I'd want to see the run into this buy side liquidity pool. It's too equal, and I'd want to see that high to get taken out. So you can frame a trade being bullish into there, and then you monitor it day by day, right? So if you read the weekly report before this, right, from here, this sweep of the previous day's low on Tuesday and that move up, I wanted to see the move back into this daily fair value gap. Now that didn't happen, and Thursday traded down lower. But if you read the weekly report, you'll see something. On Thursday, was there a bullish setup offered? Right, let's look at it now. This is Thursday, right? Let me just line it off, old school weekly commentary style, right? And where could you have took a long on dollar here? There was no long opportunities taken, essentially, right? This is coming to the end of London close. By here, this is way outside of time. You see how it goes into the consolidated state for Asia, Rangers, and CBDR, right? There was no longs offered there. Now, you see how the bias was being bullish, but your trade model wasn't offered. And sometimes what happens is the direction happens in your way, but there's no retracement offered. It's just, a strong one-way move where no moves offered in your direction. This is how your trade model saves you, right? What you guys need is this. You guys, a lot of you now, you're coming to that point of you're developing your trade plan, and you want to be market maker model traders, which is good. All of you can trade a market maker model, but what I want you guys to do is this: focus on one entry. Don't try to be the guy that's trying to catch all the different types of entries. Oh my god, because your brain is there's gonna be times where you see a few potential entries that you can take, and what you got to do is this: you got to stick to one, and that's it. Because the stop loss is gonna consider where all of those trades are going to come invalidated. I'll give you a clear example, right? This retracement, right, back into here, you could have taken this fair value gap, you could have waited for, the up candles, the order block, the mitigation block. Either one of them is okay depending on which one the trader is comfortable to enter upon. The stop loss is going at the high or some level of invalidation anyway. Do you see my point? That's why the stop loss makes up for it. What I want you guys to do is this: focus on one specific PD array for your entries. Now then you might ask, why do I need to know all the PD arrays? Because the higher time frame bias, you need to know all the PD arrays, right? You need to know what rejection block is, because if the higher time frame is going into a rejection block, you can then, have a bias moving away from that rejection block. But for your entry model, right? So what I mean is this: you need a model, and then you need an entry upon the model. The model can be the power of three, the market maker models, right? The entry is the specific PD array that you're entering upon. Is it the order block? Is it the mitigation block? Or is it the fair value gap? Or is it the breaker block, right? Which one? Whichever one you're comfortable. This isn't the one where you can come and ask me, which one do you think I should? I'm going to reply to you, which one are you comfortable with? And I've had this conversation with many of you. Now, a lot of you like to take the fair value gaps. My personal one I like to take is breaker slash mitigation and fair value gaps. I don't really like rejection block because I feel like when it runs into the rejection block, just me, and even all these years I've been, trading and I understand rejection blocks, I just don't feel comfortable as comfortable as taking a fair value gap over a rejection block because I feel like it will just run the high. And how many times has it come to a rejection block? And a few weekly commentaries ago, I said this: the fair value gap is probably the most tagged PD array because it doesn't always deliver into a deep discount or deep premium. In saying that it doesn't always get to a deep premium or deep discount, your order block and rejection blocks, the ones that are in the deep discount and premiums of the PD array matrix, they're not always tagged. The fair value gap lies 50% of the PD array matrix. So that's going to be met a lot more times than the order block and rejection block. So your volume of trades is going to be more. Yes, your risk reward might be a bit less given the comparison of the fair value gap to the order block and rejection block, but the volume of trades make up for it. And I know this from experience, hence why I like to take the fair value gap. Yes, my stop might be a bit wider, but it's okay. I'm winning trades, right? Now, one thing I want to take your attention to is this. Let's look at the COT data. You see how we're steadily inclining back, right? You see how we were net short, now we're climbing back and we're climbing back into the neutral position essentially when we're going to be zero, right? And you're starting to see these guys, right? Their retail institutions, they're creeping back to a like a net short position, right? With the DXY, and a lot of you have asked me to speak about it, how you've seen the BRIC nations come together and they're trying to adopt their own currency, and how countries are now moving away from trading in US dollars and they're trying to adopt their trade in their own respective currencies. So like the the China's currency, you got Russia's currency, and you got Saudi Arabia's currency for oil. And there's also some African countries that are doing it as well. You see, in economics, there's something called trading blocks, right? So trade blocks are just like free trade areas between countries. And what they're doing is they're trying to adopt their own currency pairs, and kind of push away the dollar. Now, that's all, that I understand what you guys are, the points people are making online, and they're saying, oh, everyone's moving away from the dollar's going to tank and whatnot. But then the response is this: you're only looking at one side of the coin. Do you think that America will just allow this to happen? Because they won't just essentially let people walk all over them. Yes, in the end of it, yes, they might not have the capacity to kind of, rival them in terms of their trade, because America is not, the biggest trader compared to, third world countries which are rich in resources and, their labor as well. But they won't let it go without a fight. Now, in saying that, a lot of people are net short on the dollar, a lot of them. Now, with me, my stance is I need a bit more confirmation. Right now, we're just in a range, right? We hit this rejection block, we moved away from it. Now we have an inside candle. If I just remove this dashed line, when we left with an inside candle, it's unsure. Now, from the previous month's candle, we saw that we swept the previous month's high and we're coming back down. You can say we come from the previous month's low. But then we met with the rejection block here on the monthly, which is the rejection block also on the weekly, right? So we need to see where the next candle is likely to trade towards. This is where exercising your patience will help, and falling down to, if you still want to trade and you have time, you're running out of time on your funded challenges, fall back to what I said every single day. Look at the daily candle and you're doing this from the opening of the next one. So the next one is always going to open unless it gaps, right, from the close of the previous candle. Where is the closest pool of liquidity from the open of the candle? Here. You can frame a trade long on dollar till this, right? Now you need framework. Now going back to what I said, remember that Thursday chart I showed you? How sometimes there's no framework to offer you. You need that framework to be offered. And waiting for your framework is going to help you when your bias is wrong. Because a lot of times when the bias is truly wrong and you are anticipating bullishness on a bearish day, bullish signatures won't show a lot. And it will be hard for your model to form. And that's where patience, that's when you're trading, when you understand that you're wrong and you have to go and reevaluate where's the next likelihood of the daily candle trading towards, right? We don't care about this close. From here, you could have caught, a Judas swing here. If you watch Friday's price action, if we go on a 15-minute, you see how it reversed towards the end of the day, right? Look, it's from, after London close, it was making that move away. Inside of our trading hours, you see how there was clear shorts offered, which was in the weekly report. If you want to see that in more detail, I recommend watching the weekly report. From this candle's low to this candle's high, fair value gap, optimal trade entry from this high to this low, and you could have, caught it, a move back to at least this low, right? Now, it didn't exactly get that low, but you could have at least taken some partials off and taken something off with the trade. For euro, I want you guys to mark out this, right? This fair value gap, and it matches with this. This is a balanced price range, right? You see this candle's low to this candle's high, and it overlaps with this fair value gap. You want to see that move back into there. Now, these again, they're relatively pretty equal. If you look at the highs, 263 and 259, right? So now you have equal tops for euro, and you have equal tops for the DXY. You see why it's a you're between a rock and a hard place. I'd favor this buy side liquidity pool to be, taken out early on in the week. If it's not, and you get retracement down into the range, I'd still frame this. Any bullish framework throughout the week, I'd frame it to attack this high, right? Bearishness, of course, you'll work towards your previous week's low and so forth. And that's how you have to let the weekly profile come into your hand. When you're stuck with an inside candle, if this candle took the previous week's low and then rejected up, we could favor the move into the fair value gap, right? But when we're stuck inside, when this candle opens, what's it going to do? Is it going for the high or is it going to go for the low? This is where you have to wait and exercise your patience. Now, of course, with NFP, it's a no-go zone. Don't even entertain it, right? I've taught you guys so much better. You guys have seen online how many people get wrecked. A lot of you tell me your friends outside of the mentorships, um, they trade NFP and they always get wrecked. Don't put yourself into, don't even put yourself close to being a statistic, right? And a lot of you even ask me like, why don't you trade gold or whatnot? And the reason is this: if you look at statistics from prop firms, gold is the asset class which absolutely blows the most accounts, and it's not even close between gold and the next asset. I think the next asset after that is GBP, JPY, right? Gold blows accounts like by many, many multiples compared to the next asset class being GBP, JPY. In saying that, why would you want to put yourself in that pool of trading gold and you're increasing your chances of becoming a statistic, right? In saying that, don't put yourself in a statistic of someone that's going to trade NFP. Remember, letting high impact news drivers like the NFP on Friday, not the ADP, but the actual NFP, you can build a bias for the next week and you can have clean trades. How many times have you guys seen it where you let NFP pass and you see it was a clear manipulation and the next week's going to do it? Now, given where the monthly is as well and the monthly candle's direction, if the monthly candle rejects off, if this is a rejection block and you see the monthly candle starts to open and shoot away higher, you can start to look back to get traded into the premium of this monthly candle's range and work your way towards this high of this, the previous month's high. You see how it can offload like a very long-term bias, right? For the S&P traders, where do you think the next, monthly candle is likely to trade? I'd see at least this previous month's high, as a target. If you go to the weekly, same as the weekly, you got clear trend line, right? You see this high, and this high. You see how like you can put a line across it. Retail will see that as a trend line on like a daily or 4 hour if we go down to the daily. Yeah. Essentially, it's a market maker buy model framework, right? You got initial consolidation, that trend line going across, that smart money reversal. If we can frame the attack, you see even the bodies of these candles, how relatively like close they are, right? If you forget looking at the wicks, look at the bodies. You see how close these bodies are, right? I'd favor a run into these wicks at least for the S&P. For the crypto market, institutional order for entry draw on a monthly. Bitcoin to 32K, it's from this institutional order for entry draw. It could be on the hands, right? I'd still rather sit out and wait to see where it's going. If you're going a 3 month, right, you see how we're in the 3 month fair value gap as well. You see it's again between a rock and a hard place. I'm waiting for the DXY to kind of tip its hand. Right now, it's been a lot slower. If you look at March as well, March has been pretty tough towards this end of the week. This week, the last week, it's been a bit tough. That happens. If you look at March from the last year, where was it? I believe it was this. This was the entirety of March last year, consolidation. And you see how April was the expansion of the quarter. Usually we could probably anticipate that again. March traded down into a, you know, discount PDRA on the daily. Let's see if April pushes it higher, right? I'd favor, so just to conclude the weekly commentary because I'm rambling on, watch the run on these highs, right? Now, if we get strong displacement through there and we're holding it, watch that move to this daily fair value gap and mitigation block. That's the targets I'd favor given that we trade higher off the bat. If not, watch the runs, to the previous week's low and into this volume imbalance here, right? So that's going to be it for this weekly commentary. Of course, any questions, always ask me. And I hope you guys are reading the weekly reports. What I want you to do is this: the weekly reports I have, if if it's possible for you to save them, because I know I've removed saving off the mentorship, or if you can take pictures of it off your mobile, I want you guys to save them for yourself. Those are lessons. I know they're not categorized as lessons as like the mentorship has, but those written right there, they are big lessons because you're seeing the week and you're seeing clear things, and there's always every single week, right? There's when something specific happens in the, I can then talk about in the weekly report. For example, specific divergences happen, or specific, reclaimed fair value gaps and whatnot. Market maker models. There might be a clean market maker model for me to make a case study on it in the weekly report. So save the weekly report somewhere if you can do that. With that being said, I'll see you guys in the next one, and take care of yourselves.